very warm welcome to all of you to our special show, which is the Real Estate Radar, your exclusive guide to navigate the dynamic real estate terrain of India. My name is Amita Vatva. Now, real estate plays a pivotal role when it comes to shaping the urban landscape of India. The real estate industry, which is experiencing a paradigm shift in response to the evolving demands of modern times. Rapid urbanization and population growth present the inevitable challenges when it comes to the terms of infrastructure, housing, and urban development. Now, however, today's real estate sector and its stakeholders are actively addressing these challenges head-on. Embracing innovation and leveraging advanced technologies, the industry is undergoing a profound transformation towards greater efficiency, affordability, and also sustainability. Now, with this show, we embark on a journey to uncover the latest trends sculpting the real estate landscape across the nation's key cities. And before we get into the details, let's shed some light on the latest report by JLL India, which is called the Home Purchase Affordability Index 2023. Now, this report provides us with important insights into the current state of market, helping us better understand what's going on. Let's tell you exactly the key findings from this report. Now, according to the Home Purchase Affordability Index 2023, the residential real estate market in India has experienced a significant growth, with notable cities like Mumbai, Delhi NCR, Hyderabad, Kolkata, and Ahmedabad witnessing a surge in demand. The report highlights a substantial increase in home purchases, particularly in Mumbai and Delhi NCR, which are becoming hotspots for real estate investment, offering lucrative opportunities for both developers and also home buyers. Let's also tell you it is worth noting the significant contributions of private players such as Adani Realty, Godrej Properties and DLF among others in fostering trust and reliability in the home ownership process. Now, these companies are investing in growth corridors like in Panvel and also focusing on projects that redefine luxury and affordability. For instance, Adani Realty's presence in micro markets like in Andheri, Ghatkopar, Bhandup, Thane, Pune, Gurugram and Ahmedabad's gift city Shantigram also provides people with an opportunity to own high-quality living spaces across diverse locations. Now, circling back to the Home Purchase Affordability Index of 2023's findings for Mumbai, which is the city of dreams. Now, despite its affordability slipping slightly below the optimal levels, Mumbai has come a long way since its affordability low back in 2013. Now, it became more affordable market in 2021. While it may still slip slightly in 2024, which is this year, it is still expected to retain its current affordability and may even see slight improvement. Meanwhile, Delhi NCR, which is now emerging as a hotspot for real estate investment and showcases a surge in demand for residential properties, that is now reflecting the city's growing urban landscape and also economic vibrancy. Let's turn our attention now to Kolkata, Pune and Hyderabad because these cities shine as the beacons of affordability. Kolkata remains the most affordable residential market amongst the top 7 cities in India and is poised to maintain its top billing through 2023 and this year 2024. Pune and Hyderabad are expected to follow suit with relatively better home purchase affordability index that scores in 2024 as compared to last year 2023 and the remaining similar levels to 2022 as well. Now, while all of the cities may fall short of their peak affordability levels that were seen previously in 2021, they will remain much higher than their previous lows. Now, this suggests that the robust market activity will prevail until the end of 2024. Now, these findings show that the real estate market is witnessing a resurgence of affordability and which is offering hope and opportunities for both the buyers and sellers alike. Now, to understand further, I have with me distinguished panelists. We have Rohan Sharma, who is the Senior Director, Research and REIS, JLL India. We also have Chintan Patel, Partner and Head, Building Construction and Real Estate, KPMG in India. Well, hello, and thank you very much for taking out your time and speaking to us here. Well, Rohan, first question to you, because let's directly dive right in. How do you see, Rohan, when it comes to the current real estate trends impacting the market dynamics in these cities?
Look, when you're talking about residential real estate, this was, as how we put it, a bonanza year for the markets, right? We've never seen these kind of sales figures. The markets were at an all-time high in terms of total sales activity, selling over 272,000 units this year. And that's, 25% higher than the peak that was seen even in 2010. So the last peak was 2010. Even last year, if you look at it, the markets were very close to the peaks, right? But so, the activity was at an all-time high. I think it's kind of funneled by 2 or 3 things. One, as an economy, we've been doing really well, right? To put a correlation, if you look at our office markets, there's a substantial amount of net absorption, values that we have recorded this year. Highest, second highest only to actually 2019, right? And so that translation of new jobs being added is kind of moving to the residential markets as well, right? And post-COVID, you've anyway seen that there is a substantial amount of change in homeowner dynamics. A lot of people want to buy homes. They want to look at bigger homes. They want to settle down, and that's also visible in the age group that's buying homes now, right? Actually, your age cohort of people buying homes actually gone down by 5 to 7 years in the last 2-3 years, right? Especially post-COVID. So all of these factors kind of put together, kind of causing where the markets are, right? A lot of people still talk about rising interest rate, but if you look at it, we are still off our decadal highs in terms of where your home loan interest rates are, right? You've had successive 6 pauses now in the repo rate. So effectively, home loan rates are still single digits, right? Still very attractive for home buyers to buy. And that, I think all of that's kind of contributed to where the markets were this year. I think the momentum is kind of likely to continue as well next year, right? We anticipate another 10 to 15% jump in home sales next year as well. Also, while the RBI is a little more conservative, the expectation is that as markets improve, global markets or global economic situation improves, you could see a headline decline in the repo rates, and that will have an impact on your interest rates coming down as well, which should support affordability levels. So the market momentum should likely continue.
And it looks promising, isn't it, Chintan? Because what role do you believe that the government policies and economic factors play in shaping the real estate landscape, particularly in cities like we talk about Mumbai and Delhi NCR?
I completely agree with what Rohan just said, right? I think just 1 or 2 points on just to top off what he said. Not only are we seeing this in the affordable and the mid-market segment, but even luxury segment has picked up really well. And this is not only just in India, but even globally, we see residential real estate playing a very different level of growth, right? So I'm happy that he at least said that we may have some interest rate declines, which further helps the markets and everybody who owns a home. Coming back to your question on government policies, especially when it comes to places like a Mumbai, Delhi, a Bangalore, some of the core key markets in India, what's happening is real estate is 2-part, right? One is you have the central schemes, but real estate, as you know, is a state subject, right? So state also has a lot of role to play. What has happened in the recent past is, in addition to the policies of the government, the ancillary policies, including things around infrastructure development and what the government has done with that, is also having a positive impact on real estate and the ability for people to even travel longer distances, thereby giving a slightly bigger area. So if you look at Mumbai especially, which is landlocked, the ability to have infrastructure, if you look at the Atal Setu itself, right, the Trans Harbour link, will have a significantly positive impact on the real estate on the other side. Not only that, if you look at what the Honorable Finance Minister said in a budget, which was technically a vote on account, but it definitely still mentioned how the mid-income housing, where people who are living in rental homes or kind of unregulated homes, should have the ability to buy. So you anyways had housing for all and affordable schemes, and now you're talking about mid-market. So I think government, while not directly putting a lot of specific incentives or policies for real estate, whatever it's doing is definitely having a positive impact.
And that means turning dreams into reality as far as the real estate sector as we talk about. But Rohan, how do you actually perceive when it comes to the increasing emphasis on green initiatives that actually shape the future of real estate development?
Look, as an economy, we have our net zero targets for 2070, reducing our emissions by 45% over the next 5-7 years. Right? When you're looking at all of those numbers, effectively real estate, which contributes 38% of all global greenhouse emissions in the globally and in the country as well, you cannot have a situation where real estate doesn't keep pace with those net zero targets or those green targets, right? We are already seeing that a substantial amount of work happening on the commercial side. That's more institutionalized. So you also have a lot of global landlords, you have a lot of global occupiers who have their own net zero targets, pushing for a lot of greening of real estate, right? In the residential space, it's still a little slower, but the emphasis is very clear that a lot of the importance by developers now is being put on creating homes which are more energy efficient, right? Not just smart, but efficient in terms of energy consumption, water consumption, recycling of water, somehow being able to use green energy. And I think even your home buyers are quite interested in projects like that. I think that kind of sensitivity towards living, reducing your own carbon footprint, it's kind of percolated at an individual level, right? So at an office level, a lot of our surveys done in the past show that, employees would want to work for a sustainability leader, or they want to work out of offices which are more energy efficient. I think that's kind of percolating down also in their living standards or in their living ability, right? So they want to look at projects which offer them at least the opportunity to live in homes like that. And I think on a long-term basis, while it's not just healthy for the environment, right? On the long-term basis, the operating expenses also tend to come down. It's cheaper, right? For maintaining it, your maintenance costs come down as well. So all those factors are important. And if there's a slight premium to be paid, I think that sensibility is there, that I'm willing to pay a premium for houses like that. And we are seeing a lot of developers who are actually very actively, advertising and marketing their projects, on these ecologically sensitive areas, or, as being eco-sensitive on an overall basis, right? More aligned to green and sustainability targets. And I think the response to them is pretty healthy. So I think there's a shift from home buyers as well, right, on projects like these.
Chintan, especially if we talk about the rise of shared spaces and community-centric living, what in your thought, as we talk about innovative approaches, can the developers actually take to cater to evolving home buyer preferences?
Okay, so just again, tagging off of just the point that mentioned, today one of the fastest growing services within KPMG is ESG, right? And the way we see the adaptability of ESG across the board in real estate was probably one of the last sectors, I would say. But the adoption is just happening at a very, very fast pace, especially on the commercial side, where both the tenants and even the financing institutions are asking for them to adhere to ESG standards. And that's a positive thing. I thought I'll just kind of leave that on the table. In terms of kind of creating shared spaces and shared areas, if you look at the kind of developments that are happening today, are these large format developments where you have a live, work, play kind of an environment, right? Because more and more Indians across the board, be it at the affordable level, the mid-market level, and especially at a luxury level, are aspirational, and they want a lot of these facilities to be available within their premises. So in addition to having green related initiatives, if people have the ability where you have walking paths, gyms, clubhouses, and I've seen a lot of these, and a recent example, a lot of these communities have started having their own Premier League tournaments and all of that, which is making it in a very kind of, a strong kind of cohort coordination way for a lot of the residents. I think this is a good trend where things are happening, and I think more can be done.
Absolutely. That would be like, a city within a city itself. The kind of, we're looking at such in the real estate sector and the preferences of the people. But Rohan, how does the Home Purchase Affordability Index, or as we call it, the HPAI, influence decision-making process for both the home buyers and the developers in real estate market?
Our analysis shows that, the maximum sensitivity of home buyers is towards interest rates, right? Prices are one side of it. Budgets is one side of it, but interest rates are very sensitive for home buyers as a deciding factor, right? Per our analysis on the HPI, it was at its lowest in 2013. It hit its peak in 21. It hasn't gone down substantially, but I mean, again, it would have gone down, below the 21 levels primarily because the last couple of years you've seen interest rates rising, you've seen home values go up as well, and effectively, if you look at it, home prices have kind of started rising after nearly 7-8 years of being completely flat, right? It's so affordability is kind of gone down a little bit, but again, it still remains pretty much at a very high levels compared to where it was in 2013, right? So still within range for most buyers. Across the major cities, in all major cities, the affordability index is more than 100. And when I say more than 100, effectively means the available income for people in those cities allows them to easily buy a house and probably more, right? The only city where it's slightly lower is Mumbai, but we already know that Mumbai prices have always been high. That said, Mumbai did hit a number of 121, right? So it made Mumbai just affordable, right? The expectation again is the same. Next year, if you do see some sort of reduction on headline, interest rates, this affordability level will keep, they'll track back to where 21 was, right? Effectively making all markets again very affordable, right? And kind of works well for the markets. And, prices have risen double digits last couple of years, year on year, across most markets, right? Charges have gone up as well, but then so have income levels, right? We don't tend to look at it in that perspective that income levels for the home buying public have also gone up. So from that perspective, affordability will still continue to remain quite healthy in the market, right?
No, because Mumbai and affordable home is quite an attractive combination, isn't it, Rohan? But if we talk about the key trends or developments when it comes to the real estate market, Rohan, should viewers be aware to make informed decisions about property investments? What's your take on that?
Look, there's a slight difference between what's affordable versus what is the affordability, right? Now, affordability will vary according to your income levels, right? Affordable is effectively, targeting the EWS or the LIG segment, primarily apartments which are smaller or compact and of a certain price range, right? Of course, informed decision making is crucial. We are already seeing a lot of the information asymmetries are now gone, courtesy RERA. A lot of information is available online, right? Buyers are, very well informed today, right? I mean, you cannot take them for a ride at all, right? RERA or no RERA, the kind of due diligence that they do at their own end, irrespective of whatever they are buying or whatever price they are buying at is great, right? It is important, it is critical, and you see it every day, right? I am not just looking at buying what I need, I'm also looking at buying what's smart for me, right? Does it fulfill my need for the next 5 years? Am I looking at a starter home? Am I looking from an investment perspective? The considerations are diverse, and so are the decision-making, matrices for everybody, right? And you see it across cities, right? The buying sentiment is kind of also driven a lot by that decision-making, right? Where I am buying is not just driven by pricing; it's also driven by like Chintan said earlier, transportation links. How far or how close am I to my workplace? Am I closer to economic hubs? Right, that's critical as well. If I'm far from economic hubs, does the place I'm looking to buy, does it have the right kind of transport links? If not today, then in the next couple of years, right? All of that is kind of piling into the whole decision making. Just to give you a case in point, right? In Mumbai, for example, you see the site visits go up immediately during the monsoon season, because people want to go and see what are the areas which are waterlogged. Okay, and that is one area where they don't want to go and buy or want to be a little careful in buying. If you're looking at things like that, I mean, people are looking at it all the time. So great way, and I think that's kind of reflected in the momentum that you see in the market, right?
No, absolutely. And that is what I was talking about, multiple factors that go in as far as awareness amongst the home buyers is also concerned. Because another question, and this is for both of you, Chintan, you can take it first, because considering the rapid urbanization and also the infrastructure development in cities like Mumbai and Delhi NCR, how do you actually foresee the real estate market evolving in the coming years, and what opportunities do you anticipate for investors and also developers?
I'm very, very positive about the way real estate is headed, at least in the foreseeable future, right? At least the 3 or 5 year cycle, if I look forward, the kind of infrastructure, and taking Mumbai as a case, an example, and even when I go to tier 2 cities, look at what's happening with Ahmedabad, look at what's happening with Jaipur, look at what's happening with Indore, Bhopal, Surat, Coimbatore. I go across India, and your tier 2 city infrastructure is also equally good. You see the number of airports that have been added. You see the train travel, right? So across the board, there are fair bit of infrastructure projects which are having positive impact. And then you add up with a regulatory framework. So what was 10 years back a customer's perception in terms of whether should I buy real estate or not, with the advent of the policy coming in, the infrastructure development, the availability of financing, the job market, when I put a lot of these factors together, it definitely gives me comfort that for the next 3 to 5 years, unless, God forbid, something were to kind of completely go wrong, this is here to stay. And I think from an investor standpoint, I think today the good part is a lot of the buyers, especially in the residential segment, are the end users. As what Rohan said, right? These are people who have jobs, both husband and wife are working, the age group has come down. So as long as this segment continues, you do not see a lot of froth coming up in the market where people are just unnecessarily buying, selling in month, 2 months, 3 months because they've seen a 10% increase. I don't think that's happening in the market. So there's a genuine set of buyer that's in the market, which is good. So if this stays, then there is a lot more hope. If interest rates come down, that is another factor that will further push it up. So that's on the residential side. On the commercial side, I think India continues to be a very, very bright spot in the global structure as we see right now. A lot many more investment is coming to India.
Right.
A lot many of the global companies are looking at India. So if we track it from just a pure play GCC standpoint, right, global capability centers, the amount of occupancy that they have got in the office space is massive, and I see that growing, manufacturing growing. So commercial real estate, office, industrial, hotels are at all-time high, data centers, warehousing. So I see a space where today India is in a fairly good state. I don't see anywhere where there is a bubble scenario, nor are the good part is, again, I am part of the deals team at KPMG,
Right.
and the conversations that we are having with investors are fairly smart about it. They're not kind of just putting money after anything and everything. So when I look at all this, I'm fairly comfortable right now as I sit today, at least for the next 3 to 5 years for sure.
Well, that's all the time we have for today's episode of Real Estate Radar. Thank you very much for giving us your time and the information about these trends. It has been a great discussion so far. And remember to also join us next time as we continue to explore the ever-evolving landscape of real estate in India. Thank you very much.